From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome now to Balance of Power, where the world of politics meets the world of business. We're going to start today with markets because equities are on the move, and for once, big tech is leading the way down, not up. Bloomberg's Abigail Doolittle is here for an update. Where are we, Abigail?
And sell-off on the day, and it feels like it's out of nowhere, but I would argue that's actually not the case. Right now, we have the S&P 500 down about 2.7%, the NASDAQ 100 down even more, and we have the New York FANG Index really leading the way. You were mentioning that sell-off for the mega caps. The New York FANG Index, if you can believe it, down 5.2%. But the reason I say that this is probably not out of nowhere, yesterday we had jitters in the morning as well, but by the end of the day, David, it was the best day in about 2 months. Now we're looking at the worst day in 2 months. All of this on the back of this too fast, frothy rally out of the March lows. This is probably just technical selling. If I use Apple as a point in case, David, Apple is about 65% above its 200-day moving average, up 160% off the March lows. This is the world's largest company. That's the degree of buying momentum, animal spirits being stirred around Apple, Tesla, all of these big tech names. So today you're seeing some consolidation of it. You could actually make the case, as painful as it probably is for those long these stocks, it's healthy. It's also painful for the major averages because of the weighting of some of these big stocks, as we've been talking about 25% going to the mega caps, to the S&P 500, 40% for the NASDAQ 100. So it's also painful for the major averages, but again, a bit healthy because of the degree of the buying power off of those March lows.
Abigail, fair enough. Everything you say makes perfect sense, but there's been a fair amount of talk recently about, are we in a version of 2000? And we remember what happened in 2000. How are we going to be able to tell? Well, this is just simply a short-term, reversion to the mean, sort of a technical adjustment, as opposed to something more fundamental when it comes to tech?
Well, unfortunately, you don't know often with a true correction and bear market until it happens. They say it starts very, very slowly and then happens all of a sudden. Relative to 2000, if we compare today on different metrics, technically you can make the case it's very similar to 2000 because it's a parabolic uptrend. Per science physics, that does have to reverse. 90 degrees doesn't hold. On the other hand, valuation very extended right now for the S&P 500. I think the last time I looked, somewhere around 25 or 30 times. However, 2000, far, far above that. I think the S&P 500's forward PE got to 50 or 60. So from a valuation perspective, you could make the case that it could push further ahead. I know that there's lots of news right now and talk around the options market. Some are saying that options look like 2000. The degree of call buying, that you have investors buying very short-term bullish option bets, suggesting that they're very bullish for right now, but not so much as we go further out, especially as we go into that very volatile election. So some metrics are similar to 2000, some are not similar. It does seem, though, the degree of buying that we have seen off of the March lows, again, some consolidation would be healthy. Keeping in mind, though, the Fed is making it very clear that they have the back of the market.
Okay. Thank you so much. That's Bloomberg's Abigail Doolittle. We'll keep our eye on the markets throughout this hour. But in the meantime, let's turn back to politics. Presidential candidate Joe Biden travels to Kenosha, Wisconsin today, where he will meet with the family of Jacob Blake, whose shooting led to demonstrations and to riots. We welcome now someone on the scene in Kenosha. He's Gerald Mass. He's a professor of political science at Carthage College in Kenosha, Wisconsin. So, Professor, thanks so much for being here. Give us an update on exactly what's going on as of last night in Kenosha.
Well, the larger environment has really settled down after the shooting supposedly by vigilantes or militia groups a couple days ago. The temperature has really kind of declined. President Trump came and there was a whole lot of hullabaloo over that, but it didn't kind of come through in terms of tension for the most part. The Blake family held a kind of a concurrent event to bring the community together. So things have really kind of calmed down. I think Democrats in the state generally have been kind of increasingly concerned that the DNC and the Biden campaign have kind of forgotten about Wisconsin. The convention, of course, was canceled in Milwaukee. Mr. Biden did not travel to Milwaukee, but he is here today. So that's kind of where we're at.
Well, and Kenosha is particularly interesting because in 2016, Kenosha County went for President Trump by the narrowest of margins, only 238 votes. So it's sort of a true battleground right where you are. Give us some sense, for as far as you are concerned as a political scientist, how does this play politically there? I mean, I noticed that there's Fox News polls right now that actually suggest that people trust former Vice President Biden more than President Trump on the question of policing and criminal justice.
Right. Well, I mean, I think that both Kenosha and Wisconsin are, in some sense, important microcosms for some larger national conditions. I think that public perception of law and order, racial injustice, and the police as an institution are increasingly politicized, and our politics increasingly are taking on a kind of racial dimension. This is kind of affective polarization. That is to say, people in one group are becoming polarized not by a love for their own group, but by hostility towards the other. And so we're kind of being driven apart along party lines, racial lines, and along an urban and rural cultural divide. If you look at Kenosha, your point about Kenosha, Kenosha is both a city and a county. And that urban-rural divide is really, really clear. The city of Kenosha voted for Hillary Clinton in 2016 by, I would say around 15%. But as you pointed out, the county went to Mr. Trump by the narrowest of margins, less than 1%. So, we have Mr. Trump and Mr. Biden both visiting the city, both kind of spinning these different narratives of what's going on. And this is not really a new narrative for Mr. Trump. He took advantage of what I would say are kind of increasingly tense social and political conditions, kind of driven by, I would say, rising economic inequality in the country overall to a certain extent, but really in certain locations, like these post-industrial cities in the upper Midwest, to his advantage. So that obviously he won in 2016. He seems to be kind of going back to that again this year. Mr. Biden is pitching a different stratagem, and it seems to be working. But that future seems a little unclear to me.
Well, and I want to focus in specifically on the suburbs. You mentioned urban, you mentioned rural. In between, there's something called the suburbs. And a lot of people are saying that the suburbs, and particularly women in the suburbs, will be key voters. Talk about Wisconsin. As you look at Kenosha, you look at Milwaukee, you look at other suburbs there. Is it possible that some of those suburban women might go over to Mr. Trump if they feel he's going to keep them safer?
Yeah, I mean, I think that that's a possibility. Certainly, that's the clear strategy that his campaign is pitching. But we're seeing some shifting of white voters. Women with college education, in particular, have shifted to the Democratic Party in recent years. White men with college educations have started to. They're well behind white women with college education. And those people are clustered in suburban areas. And in Wisconsin, you have clear pockets of Democratic strength in Milwaukee and Madison. The northern rural areas are solidly Republican. The western counties are kind of this battleground area. And so I think that there is a possibility that a kind of concern about security and law and order might be a way in which to turn out concerned voters in the suburbs.
Right.
But it's not clear. It's not really clear.
Professor, just one more, just to be a little more specific. It appears right now that President Trump is going to run against not just Democrats, but Democratic mayors and governors, as he's saying he's going to try to cut off federal funding for some cities, including New York City, where I'm sitting right now, because he doesn't think they're doing enough on law and order. What do you make of that strategy? Can he appeal to some of the people, certainly in rural Wisconsin, saying, you know what, the real problem here are those Democrats who are governors and mayors?
Yes. I mean, I think that this is a clear strategy that he's taking. Can he appeal to those voters? Yes. The numbers really tell us this. So, for instance, the Marquette Law poll came out just before the Kenosha incidents, and we see some things that really kind of reinforce these stereotypes. Are police too willing to use deadly force is a key question in that poll. Amongst white Wisconsinites, 38% only say police are too willing to use deadly force. But for blacks and Hispanics, 70% say they are. Real clear differences between town and country in that regard. But President Trump won in the country, so can he rally these people? I'm not sure that he needs to, right? So the question is, does it play out in the suburbs? And that we'll have to wait and see.
Yeah, key question.
But right now, it doesn't look like it is.
Yeah, key question. Thank you so much, Professor. Really appreciate it. That's Gerald Mass of Carthage College in Kenosha, Wisconsin. Coming up here, we're going to go to the White House for its read on the jobless claims out today from National Economic Council Chief Economist Joe Lavorgna. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. President Trump travels to Western Pennsylvania today, where he's going to hold a rally in Latrobe tonight. Welcome now, Bloomberg White House correspondent Mario Parker. So, Western Pennsylvania, key sort of borderline for the president, right? What is he trying to accomplish, Mario?
Right, absolutely, David. We're seeing some classic in this unprecedented election cycle. We're seeing some chess moves here on the board now. We're seeing Joe Biden out in Kenosha, Wisconsin, and we're seeing the president essentially in Joe Biden's home state of Pennsylvania. And the president is really trying to vie for this battleground state. What
are the issues for people in Latrobe, as best we understand them?
Sure. One of the biggest issues is fracking, energy policy. The president, his campaign has really tried to land punches on Joe Biden for associating him with the Green New Deal, trying to say that he wants to ban fracking. Joe Biden came out and responded to that earlier this week, saying that that's not the case. But the fact that he even bothered to respond lets you know that those punches are starting to land in a key state and a key region.
And does it make it a little more difficult for Vice President Biden? He can say he's not going to stop fracking, but he does have a fairly aggressive green energy policy that, if you take it by its term, we're just not going to need as much oil and gas.
Right. And one of the things that the Trump campaign is betting on, right, is the fact that we're in this severe recession. People are worried about their livelihoods. The last thing they want to hear is even the scantest possibility that their jobs could be ended or their careers could be ended permanently by D.C. regulations. So that's the bet that the president is making. It's incumbent on Joe Biden to convince voters that that's not the case, that he wants to be environmentally friendly, but also saving these jobs, these blue-collar jobs, and quite frankly, the blue-collar workers that he'll need to back him if he's going to win this election.
Okay, thank you so much, Mario. Great to have you with us. Bloomberg's White House correspondent. He is Mario Parker. A key issue in the presidential election is the economy, and in particular, as we just said, jobs. Jobless claims numbers out this morning dipped below 1 million and were better than expected. For The View from the White House, we welcome now Joseph Livornia. He is chief economist for the National Economic Advisors. Thank you so much, Doctor, for being with us. Appreciate it. Give us your perspective on what's going on with the jobs claims. As I say, they went down, although there's some change in the methodology of how they're calculated, right?
Yes. Well, there's been a seasonal issue because this forced shutdown, this pandemic contraction, it's the most unusual recession, if you want to call it that, we've ever had. Certainly wasn't the result of economics. The economy was excellent, but the thing is, it destroyed the seasonal patterns in the data. The normal patterns you see intra-year, those were changed, and therefore the data have been distorted because of it. The good news, though, is that the trends in the data, and this was the case even before these adjustments, the trends in the data were meaningfully lower. You've had great progress made on claims. There's more work that needs to be done. The president is working tirelessly on that. We could discuss that more. The continuing claims data, which don't really get captured much in the press, they're down significantly, 10 million or so, from almost 10 million or so from where they were back in May. And that's a very good sign that the labor market is healing further, that the unemployment rate is likely to drop. So there's a lot of good labor news, despite how we might technically adjust this data to better account for what's happened.
Tomorrow's a big number, the jobs numbers. Are you going to make a prediction here as you talk about what's going on with the labor market?
One of the great parts of my job is not being in the private sector. I don't have to give a forecast. What I can tell you is the street is looking for another sizable gain on private jobs, well over 1 million. What we've been arguing is that the president's policies have gotten the economy back much faster than people thought. The private sector economists, David, were looking for job growth significantly less than what's happened over the past 3 months. About 12 million more jobs have been created than what people were looking for. Unemployment's come down. So I would say that the broad trends look great. You've got a housing boom. You've got a manufacturing boom. We had very strong auto sales this week. Production is set to go up over 200% this quarter. Those are all great signs that good jobs are coming back for middle America and that the economy, regardless of what tomorrow's numbers shows, I'm optimistic they'll look good, but the broader trends just to me look great.
No question the trends are in the right direction. At the same time, we have this issue called the Pandemic Unemployment Assistance Program, which would indicate that you've got a continuing problem, even a growing problem when it comes to gig workers and the self-employed. Are you worried about that?
Well, if you're talking about those industries, you've got very onerous business regulation in places like California. which run completely counter to the president's policies, who's been very pro-business, trying to deregulate, trying to put rules and safety in place where it makes the most sense to protect people and protect livelihoods. So I would say if you're worried about the gig economy, I'd focus more on sort of local politics in California, where it's been a problem.
We got another number out today, which is the trade balance, which was not good news at all. I think it's the highest deficit that we've had in something like 12 years, a long time. What's going on there? This was a terribly important issue to President Trump as he came to office. Seems to be going in the wrong direction.
Yeah, I mean, look, the numbers are very volatile month to month. The fact is the economy has come back very quickly. And what's happened is inventories have been drawn down. We've had to import to meet that demand. The good news is, I alluded to with autos, the production you're seeing there. You're also seeing it more broad-based in the economy elsewhere. You're seeing a big surge in production. That's going to put goods back on the shelves. A lot of those goods are going to be domestically sourced, and you're going to see those trade numbers, David, come in quite significantly in the next few months.
So, Joe, you mentioned before the construction, the boom, as we can call it that in construction, also the pickup in manufacturing. At the same time, an awful lot of the economy is tied to services. Are you concerned that if we get the jobs back in manufacturing and in construction, that's going to not make up for the enormous number of jobs in the services part of the economy?
I'm not, in part because the economy is very dynamic. I alluded to the fact that we're recovering much faster than people have thought, so that speaks to part of that story. The other thing is we're creating a lot of new jobs and a lot of new industries post-pandemic, so I'm pretty confident that with the right policies, the president's policies of pro-growth, you're going to get a lot of these jobs back. And let me also add that in today's ISM services category, we saw a further large jump in the employment component, up 6 points. It's recovered 3/4 of its pandemic-related drop. It's actually higher than where it was in March. And that, to me, David, is a very good sign that we're going to get a lot of these service sector jobs back, especially as the economy reopens, because we're seeing our mitigation efforts working, cases are dropping, and hopefully the news that we've been hearing about with therapeutics and vaccines is coming soon. And that would be great news, and that's going to get people back safely and productively.
Joe, you've mentioned a couple of times the president's plans for a second term and what that would do for jobs. I want to give you that opportunity to explain what that is. We saw the convention last week. There are a lot of bold promises made in terms of creation of new jobs. How is that going to get done? Is that going to be more tax cuts? Can you get all the way there with deregulation?
Well, it's all a bunch of things all tied in together. So it's creating a very pro-business backdrop. That's through the reduction in marginal rates, accelerated expensing, corporate tax rates that sort of level the playing field to our international competitors. And it's been deregulation and trying to get American jobs back. And that's why if you look at the energy industry, for example, to become energy independent and have a very productive manufacturing sector where businesses are incentivized to relocate here or to maintain production here, that all kind of works hand in hand. But I would say if you're looking at the equity market, you've seen this massive recovery. The market is forward-looking. The market, to my mind, is anticipating these pro-growth policies to continue, which is why, David, if you look at private sector forecasts and where they've got GDP in the second half of this year and where they're estimating growth to be next year, we're going to recover all of the pandemic-related contraction by early 2021. So to me, the president's his indomitable optimism is very justified in the numbers and what financial markets are telling us.
Okay, Joe, really appreciate your time today. Thank you. That is Joe Livornia.
Of course.
He is Special Assistant to the President and Chief Economist of the National Economic Council. Still ahead, we take a look at the markets and the struggle over tech between the United States and China. This is Balance of Power on Bloomberg Television and on radio. It is time now for a check on the markets, and boy, are they moving in equities and not in a good direction, particularly if you take a look at it. NASDAQ is way down, and here to bring us up to speed is Kaylee Lyons. Kaylee, what's going on?
David, not a good direction at all. We're seeing losses of 2% or more across all three of the major averages. That would put us on pace for the worst day since all the way back in June. And as you mentioned, this is really a tech underperformance story. The NASDAQ 100 is down 5.5%, biggest drop since June 11th, and it's really even semis that are leading the biggest losses. The SOX index is down by more than 5 full percentage points. When you look beneath the surface of the equity market, it is the cyclicals that are holding up a bit better. You actually have the energy sector higher on the day by about 0.75%, but then information technology lower by the better part of 5%. Of course, It seems to be a little bit of profit taking here, David. Remember, a lot of these names very high flying. We've seen an incredible rally off the lows in March. The Nasdaq 100, even with today's losses, up 70% over that time. So it may just be investors rotating out of some of these very, very richly valued names. You're seeing that play out in Tesla, which is lower for a third day today. Apple as well is actually the biggest points knockoff on the S&P 500. It's responsible for about 15 of the 100 points the S&P 500 is down at this point. And also some of those stay-at-home stocks, those trades that have gotten so much traction during this pandemic are unwinding as well. The likes of Zoom Video and Peloton each down around 9 to 10% at this point, David.
Well, Kaylee, as you suggest, I've heard elsewhere as well, maybe some of these big tech stocks just got overextended and, you have to revert to the mean. At the same time, you mentioned semiconductors. Semiconductors are in the news today for a different reason. That's China, because China says we're going to double down and really back our semiconductor industry. What kind of a factor might that be for us?
Well, initially, that was what was leading semiconductors lower before the open this morning. This report that China is planning to shore up its own domestic semiconductor production, given all of the issues with the Trump administration and the restrictions they have put in place. It's a 5-year plan, but it really underscores the fact that it's not just a trade war with China, but also this burgeoning technology war, given semiconductors are so important to so many high-tech industries. Now, that is especially concerning for chip makers here in the U.S. Many of them derive 20% or more of their revenue from China. So if they start to source that production domestically, not with the likes of NVIDIA or Broadcom, that is a major problem for these players. And you are seeing that reflected in their share prices today, all of them down at least 5%, but NVIDIA, Advanced Micro Devices, Skyworks are all down about 8% at this point.
At the same time, would President Biden have a decidedly different approach to China than President Trump?
Well, our economists over at Bloomberg Economics have tried to chart that. They basically think Biden would fall somewhere in the middle between President Obama, who was very engaged, very strategic with China, and President Trump, who has been very unpredictable and falls very much in that containment category. That said, though, that does mean more uncertainty and predictability, which is something that markets certainly do not like, David.
Sure don't like it today, that's for darn sure. Thank you so much to Bloomberg's Kaylee Lyons. Coming up here, we're going to talk to strategic advisor to the Biden-Harris campaign, Seth Harris. He's joining us on countering the Trump-Pence message. And this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Former Vice President Joe Biden, as we said earlier, will be in Kenosha, Wisconsin today, where he will meet with the family of Jacob Blake, whose shooting by police triggered demonstrations and violence. Welcome now, Chief Washington Correspondent Kevin Cirilli. Kevin, great to see you. Give us a sense of what the Biden campaign is doing here, why they're going to Kenosha, what the messages they're trying to get out.
Well, three things. In terms of policy, this is an opportunity for the Biden campaign to roll out their policy for how specifically Democrats would seek to combat what they are arguing is institutionalized racial inequality in this country. It's a stark contrast to what Republicans have been pushing for, which is a new set of policies as it relates to funding of police departments, as well as what they're saying is law and order. But the politics of here, secondly, is fascinating because Kenosha County is a county that President Trump was able to beat Hillary Clinton on by just 255 votes, becoming the first Republican in recent election cycles in more than 2 decades to carry Kenosha County in a presidential cycle. But finally, all of this comes at a time in which, after the conventions, now voters in swing counties and swing districts across the country are really starting to pay attention to the presidential race. And whether it's in Minnesota, Pennsylvania, Arizona, or even North Carolina, the swing state battlegrounds are really starting to intensify now, just a little more than 2 months before Election Day. David?
So, Kevin, you talk to the campaigns regularly. Give us an insight into the Biden campaign strategy here, because there are those who think that the longer we focus on the civil unrest coming out of the racial issues, the more difficult that is for Vice President Biden. It benefits President Trump and his law and order message. Is that the way Biden sees it, or does Biden think that actually he could win on this and actually gain votes as opposed to sticking with the economy and the coronavirus?
Well, when I talk to Democrats, they push back on the notion that voters are only looking at one specific issue in a vacuum. And so they're looking at this in terms of a much more broad set of tone coming out of the executive branch. The Democrats are saying that the Biden presidency would offer a more traditional tone in terms of what many Americans are used to coming from the tone of the president. However, in contrast to that, Republicans are arguing that the president has been able to aggressively go after issues pertaining to law and order and police department defense. So it really, I think, is on a collision course between the pandemic and the economy, though, because when we get all of these quickly moving developments as it relates to vaccination implementation, with now the administration and the federal government telling states yesterday to be prepared for a vaccination rollout as early as November 1st, suddenly the economics and the health component are really one and the same as we inch closer to November 3rd.
Totally right, Kevin. Couldn't agree more. Thank you so much. That's Kevin Sorelli. He is, of course, our Bloomberg chief Washington correspondent. Labor Day traditionally means the true kickoff of the presidential race, with the issues of the coronavirus, the economy, and racial unrest vying for the attention of the American voter, as we've just been talking about with Kevin. Welcome now, Seth Harris. He's strategic advisor to the Biden-Harris campaign. Mr. Harris served as Deputy Secretary of Labor and Acting Secretary under President Obama. So thank you so much for being with us. Really appreciate it. Give us the sense from inside the Biden campaign of what the issues are they think they have to occupy, high ground they have to occupy and defend.
Well, the most important issue in America right now is the coronavirus pandemic, which is, killing 1,000 Americans a day. That's keeping a lot of people locked up. It's depressing our economy dramatically. Before we turn to the economy, we really have to address this pandemic. As Kevin said, the two issues are inextricably bound up. And Vice President Biden has put out a detailed plan for how we would not only deal with the pandemic generally, but he just this week put out a plan for how we would deal with reopening schools safely. Trump beats the drum endlessly, open, 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 but he never uses the word safely because he has no plan for keeping workplaces safe, keeping schools safe, keeping businesses safe. That really needs to be our focus as a society right now, and that's where Joe Biden is focused.
Do you believe it's as urgent in people's eyes right now? Because, it's flared up, certainly in New York, New Jersey went down. It flared up in California and Texas went down. We're seeing some in the Midwest now, and we do see jobs starting to come back, right? We had jobless numbers today that were better than expected. They're certainly down under 1 million for the first time. We'll see tomorrow what happens. Are things getting better already?
Well, I don't think they are, and I want to push back a little bit on those unemployment claims number that came back today. The actual numbers went up a little bit. It was only in the seasonal adjusting that the Labor Department does that the numbers went down below 1 million. We have 29.2 million Americans currently receiving unemployment benefits. 1 in 5 American workers is right now receiving unemployment benefits, and that's because there are no jobs in the economy. That is a consequence of the pandemic and really grotesque negligence, malign negligence by the Trump administration. He apparently threw his hands up in the air a few months ago and said, well, I can't fix this thing by snapping my fingers, so I give up. So he's got no plan for the pandemic, no plan for the economy, no plan for reopening schools. On the other hand, Vice President Biden has put out detailed plans for all of those things, and he's going to bring us together to try and come up with a common solution. That's really what we need in the United States right now.
Well, specifically on the economic plans, because you're right, certainly I've read them. Former Vice President Biden has very specific plans, but they've got some big price tags attached to them that are going to require taxes or borrowing, something like that. And right now we're seeing the deficit go past 100% of GDP for the first time since World War II. Should we be concerned about that?
I think we should be concerned that we're seeing gigantic deficits, and yet we're seeing no benefit to the American economy of smart deficit spending. A big part of the deficit problem that we're experiencing right now is because of the massive tax cut for the wealthy and for wealthy corporations that Donald Trump helped to drive through Congress. Working people got a small tax cut, but people on Wall Street who are now feeding at the trough that the Federal Reserve has provided to them, those people did extraordinarily well. So what Joe Biden's strategy is to ask the people who are doing the best in our economy to pay a little bit more so that we can afford an aggressive effort to fix American infrastructure, to invest in American manufacturing, to invest in the American care economy and education, to begin the process of fighting back climate change so that we can turn our economy into a green economy with a smaller carbon footprint. That kind of spending makes sense and will help our economy to grow, and that will in turn reduce deficits. Let me also say, in a crisis, you have to run a deficit, particularly when interest rates are as low as they are right now. It costs us very little to do that. But if you go into debt in order to give money to rich people, you're just helping to weaken our economy.
You mentioned specifically investing in manufacturing, and I think at least some people think in 2016, one of the things that helped President Trump win the Electoral College was appealing to some of the manufacturing base in things like my home state of Michigan. He's in, Vice President Biden's in Kenosha, Wisconsin today, where they lost, of course, a big AMC plant, sort of diminishment of manufacturing. What can a Biden administration do to address that issue, or is that a larger, really long-term trend in the country?
Well, we have seen a long-term trend in the diminishment of manufacturing, but that isn't independent of public policy. That is directly related to public policy. It's partly because we haven't been aggressive enough in trade, and Vice President Biden has talked about fighting for every American job in our trade, in our dealings with China, in our dealings with other countries. Using the power of the federal government, which spends immense amounts of money, about $400 billion a year, focusing that on products that are made in America. You know, Trump has promised that. He has failed. Plants are closing all across our country because he has failed. Biden will harness the power of the federal government as a purchaser of goods and services and use that to put Americans back to work, and then encourage the private sector to do the same thing. The other thing that he's very focused on is bringing supply chains home, particularly pharmaceutical supply chains that are so critical in this pandemic environment, but other critical supply chains, so that Americans are creating the supplies, are making the supplies that we need in order to keep our economy going in difficult times. So that's a big part of the strategy for the president. Let me just, for the vice president, let me just say one other thing. It's important to create jobs, but it's important to create good quality jobs, jobs that pay enough to support a family, that provide retirement savings, health insurance, that give people the middle-class lifestyle that Joe Biden is dedicated to rebuilding in the United States. That means unions. It means giving workers the opportunity to choose to organize a union or bargain collectively with their employers. It also means labor standards like a $15 minimum wage, strong prevailing wages for construction workers. We need good quality jobs. That's not what we've gotten under Donald Trump.
Seth, I'm going to go back just one half step to taxes. And the reason I'm doing this is because a viewer actually is watching and asked a question, and I think it bears answering. When you talk about taxing people who can afford it, can we really pay for the substantial programs that Vice President Biden is proposing without taxing the middle class? Because most analysis I've seen says, you can't get that much out of the very wealthiest in the corporations.
We're not. Joe Biden's not going to raise taxes on anybody who earns under $400,000 a year. The focus is going to be on taking back the money that was given away in the Trump tax cuts to the wealthiest 1% and 0.1% in the United States. Also, tremendous giveaways to wealthy corporations on our country. He's going to raise that marginal tax rate on corporations. He's going to restore the top tax rate for the wealthiest people in our country. Also, he's going to incentivize bringing jobs back to the United States. Donald Trump's tax cut bill actually subsidized American corporations moving their jobs overseas. Joe Biden is going to reverse that and use the tax code in order to force those companies to bring their jobs back to the United States so that Americans can have those jobs.
Okay, Seth, thank you so much for being with us. That was terribly helpful to understand Vice President Biden's position. That is Seth Harris. He's former Deputy U.S. Secretary of Labor and advisor to the Biden campaign. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. I'd like to follow up on what you and Mr. Harris were discussing. A warning from the top infectious disease expert in the United States. Dr. Anthony Fauci says the 7 states that have seen increases in coronavirus cases should be particularly vigilant over the Labor Day holiday. Dr. Fauci said these states are at risk of a surge. North Dakota, South Dakota, Iowa, Arkansas, Missouri, Indiana, and Illinois. After the Memorial Day and July 4th holidays, there were increases in infections. Facing a spike in coronavirus infections, France is unveiling a $118 billion recovery plan. The package is aimed at creating jobs, saving struggling businesses, and pulling the country out of its worst economic slump since World War II. France reported more than 7,000 virus cases today, the highest daily rate in Europe, and well above the several hundred cases a day in May and June, when France was emerging from strict lockdown. Joe Biden meets today with the family of Jacob Blake. The black man shot 7 times in the back by a police officer in Kenosha, Wisconsin. The campaign says Mr. Biden and his wife Jill also will hold a community meeting in Kenosha. President Trump was there 2 days ago. He didn't meet with Mr. Blake's mother because she wanted lawyers to monitor the conversation. In the East China Sea, one man was rescued after a ship carrying 43 crew and 5,800 head of cattle overturned and sank. The survivor told the Japanese Coast Guard the ship had engine trouble and capsized when a wave hit it. A typhoon swept through the area this week. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Coming up, why might the jobless claims numbers we got today be harder to interpret than usual? We ask Adriana Kugler of Georgetown University. This is Balance of Power on Bloomberg Television and on radio. Jobless claims released this morning dipped back below 1 million and were better than had been expected, but they're still well above the average of past years, and the methodology may make comparisons difficult. We welcome now an expert. Adriana Kugler is professor of public policy and economics at Georgetown. She earlier served as chief economist at the Department of Labor under President Obama. So, Professor, thank you so much for being with us. Start with this change in methodology, because as I'm reading, I'm trying to react to these numbers. I have people saying, you can't, that's not really apples to apples.
Very good point, David. We're really comparing apples to oranges when we compare the 880,000 that we see in terms of unemployment claims this week compared to the 1.1 million we saw the week before, because there was a seasonal adjustment that the Department of Labor decided to this week. Unfortunately, they did not adjust all the claims going all the way back to March. So as you said, this is not an apples to apples comparison. These are apples to oranges. What we do know is that the claims this week, if you had not done the adjustment, would be closer to 1.6 million. And that's what didn't make it into the headlines this morning, but it's something for people to keep in mind. The seasonal adjustment substantially reduced the number of claims that we're seeing. The actual number, if we were using the same methodology that we have been using all along since March, would be a lot higher. That means that basically we have 58 million Americans who since the middle of March have claimed unemployment benefits. And about 30 million of those continue to claim unemployment benefits. So no surprise, the unemployment rate remains stubbornly high, at the highest rates that we've seen since the Great Depression.
No question that it's too high. Everyone would agree to that, Republican and Democrat alike. At the same time, is the trend line in the right direction? And by the way, continuing claims have come down, have they not? It looks like it's down to about 1.3 million. It was expected to be 1.4. It had been 1.5.
So those are new claims. That's right. So the new claims have started to come down. Continuing claims continue to be very high. The unemployment rate has also started to come down. The peak was reached in April at close to 15%. Again, highest rate we have seen since the Great Depression. It still remains at double digits, though. And these double digits, I think everybody would agree, even people in the Bureau of Labor Statistics, they underestimate probably the actual number of unemployed that we have. And that's because of 3 reasons. There is an issue of misclassification. People who claim they're still employed but on temporary layoff are not necessarily being counted as unemployed. And back in March, there were 5 million people who were counted actually as employed, but we should have thought of them as being unemployed. Then you have the very large number of people, about 4 million people that have gone up since basically February, who now say they're part-timers for economic reasons. That means their hours have gone down. They would rather be employed in a full-time job, but they're employed part-time. And so you could think of them as being partly unemployed in some sense. And then the third issue that happens is that there are another 3 million people who have gone out of the labor force. And they tell us they're not looking for a job because there are not jobs out there, but they actually would like a job. So that's a real concern because, again, we should be counting those people as unemployed. If we counted all those people, the unemployment rate would be probably another 4 or 5 percentage points higher than the actual reported number that we see.
Professor Kugler, address one other issue. Apart from the claims that we saw regularly reported, there's something called the Pandemic Unemployment Assistance Program, which basically, as I understand it, goes to the self-employed and to the gig workers, essentially. And that did shoot up significantly this month. We heard from somebody from the White House just earlier in this program that that's a problem with state regulation. What's going on with that?
So there, as you mentioned, from the CARES Act, basically 3 things that were done. One was to provide additional benefits to $600 per month for the average unemployment claimant. That expired in July 31st. The other 2 programs that the CARES Act expanded, and that goes until December 31st at the end of the year, were the PUA, the Pandemic Unemployment Assistance Program, which is actually a federal program, but it's being distributed through state offices. And the other program is the Extended Benefits Program, the PUC, or PEUC, the Pandemic Unemployment Employment Compensation Program, which extends benefits for another 13 weeks. Those do keep people out of poverty, basically. They keep them in a situation where they have some support during this period of unemployment.
Okay, thank you so much. I really appreciate, Professor, your time today. That's Adriana Kugler. She is Georgetown University Professor of Public Policy and Economics. More market coverage coming up next. This is Balance of Power on Bloomberg Television and on radio. We want to come back to the markets now. The equity markets have really been selling off today, and they continue to sell off, particularly when it comes to tech. To bring us up to speed, we're turned now to Abigail Doolittle. So it doesn't seem to be getting much better, Abigail, since we last spoke.
It is pretty ferocious. We still have that S&P 500 down more than 3%. The New York FANG Index, the mega caps, Apples, the Googles, the Teslas, the Facebooks, that's down 6%. Its worst day since March. So some very strong selling power here, as we were talking about before, probably less having to do with fundamentals. Nothing changed overnight because remember, David, yesterday we had a jittery morning, then the bulls charged forward. It was the best day in 2 months. Now we're seeing the worst day in about 2 months. So the bears are answering yesterday's bullish call. Against the backdrop, though, of course, we do have payrolls tomorrow, so there could be some anticipation around that, considering the ADP was a little bit disappointing and some of the nuances around claims as well. But again, too far, too fast, and so now you're seeing some consolidation of the parabolic uptrend, David.
So Abigail, I'm not sure it had to do with parabolic uptrend, but we do have one very important influential market analyst who came out with his explanation today, saying the real problem is the polls. President Trump said the real issue is polls, a Fox News poll, I must say, that shows that he has not really gained on Vice President Biden. Do you see anything in the numbers? Because you were here yesterday talking about how the markets might be reflecting what's going on, and the only thing I heard was volatility.
Volatility is definitely going to be creeping up into the election. I don't know if I would agree with President Trump in terms of the polls being the source of today's volatility, but going into that election, so many different surprises are possible. In fact, the VIX, or a gauge of volatility, rising today. The VIX curve suggesting we're going to see volatility right through until December, suggesting that there could be a contested election, or perhaps the Senate goes to the Democrats. Some sort of surprise. However, relative to numbers with the presidential election, something that does stand out. The polls, as you know, do favor candidate Joe Biden, although President Trump they are narrowing toward him. But one suggestion pointing to the possibility that President Trump could pull out what happened in 2016. Highly taxed companies are doing so much better right now than low tax companies. Joe Biden, his plan is to raise taxes. President Trump last week talking about possibly even trying to lower them more. Perhaps some investors, traders, thinking that President Trump, again, could pull out another surprise win relative to the Electoral College, maybe the popular election. It's unclear, but volatility is probably here to stay, especially right into and out of the election.
Well, and one last one, Abigail. When I try to look at whether it's a real risk-off sort of day, it looks like bonds are up, so that would indicate it is, and the gold is down. So what do you make of that?
You know, so bonds are really interesting, David, because they're actually down 5 days in a row, so a bit of a tell on today's selling action. But bonds are barely down today. So if it was a real risk-off day, flight to safety, you would see bonds soaring. That's not the case. It tells you that today's sell-off for stocks may be a bit temporary.
Okay, thank you so much, Abigail, for keeping us up to date on the markets. That's Bloomberg's Abigail Doolittle. Coming up, we're going to have a second hour Balance of Power over on radio. In our second hour, Vonnie Quinn, our colleague, is going to be talking with Bill Ackman about his unsuccessful bid to merge with Airbnb. This is Balance of Power on Bloomberg Television and on radio.